Welcome to a special webinar about the USDA lending programs. We're going to talk today about the USDA B&I CARES Act program, which is pretty cool for Main Street and also for lenders. This webinar is presented by the National Rural Lenders Roundtable, and also we have input from the USDA National Office. Let me introduce Thomas Kimsey, the president of the National Rural Lenders Roundtable, as well as the president of Thomas USAF. Welcome, Thomas.
Thanks, Bob. Thanks for everyone being here today. We're excited to be able to host this with the USDA National Office to talk about the B&I CARES Act loan program today. So thanks for the introduction. Thanks for everyone being here.
Well, let's start with that. We have one poll question. Let's go to that, Joseph. There we go. How many loans have you funded this year? Actually, we said fiscal year. I assume we're talking about the government fiscal year. So let's go back to October 1, 2019, when the world was sane. Very good. We got some experienced people on the line, Thomas.
Well, no, that's sort of what I thought. We would have a pretty good experienced group with us today joining us. So that's good. We should have some good questions, good feedback today.
Thomas, I'm going to let you introduce the panelists, and I'm going to let you take it over. Go ahead, Thomas.
Thanks, Bob. So joining us today from the USDA National Office is our Acting Administrator, Mark Brzezinski. We're also going to have joining us in a few minutes our Division Director, Aaron Morris, and we also have Dave Chestnut, our Branch Chief for Rural Cooperative Business Services. So thank you, gentlemen, for being here. Thank you for hosting this with us today as we explore how to provide access to capital to rural America. And this working capital program will be very beneficial to our rural borrowers and businesses across the country. So with that, I'll let Mark, if you want to get started or say a few words, we'll move through the program.
Hey, thank you, Thomas. We appreciate the welcome. We greatly appreciate Thomas and the National Rural Lenders Roundtable for hosting this webinar, for Bob Coleman for the host and really providing the infrastructure for this webinar. It's great to touch base on a mid-Friday, with some experienced lenders and maybe a few lenders that are looking for some opportunities in the business and industry program. We're glad to take a couple of minutes to share some insights and a little bit more details about the B&I CARES Act program. We'll start off with a little bit of an overview for those lenders that aren't familiar or they're not familiar with the B&I program, of a little bit of an overview of the B&I program. And that also will help us build the foundation, kind of talking about the B&I CARES Act program. The B&I CARES Act program is built on the B&I program, though we wrote some significant differences in the provisions for the program. So those of you that understand the B&I program will have a little bit of a heads up on understanding the B&I CARES Act, but it would be critical to understand where the differences are, and that's where we're going to focus kind of our discussion today. And then we'll wrap up talking a little bit about the application process, of how we function and how this program will function going forward. If you're looking for other resources, additional information about the program and follow-ups, we'll point to a couple of websites and some other resources for you. Okay?
Hey, Mark, can I stop you there? For some reason, you are off the grid on your video feed. Maybe you clicked the webcam by mistake. See if you could fix that. There we are. Okay, very good.
Yes. For some reason, today is a bit of a video or a technology challenge for me. Things aren't quite working the way they should be, but usually it works much better. But we're getting along. So for starters, the B&I program, this is a little bit of insight on the standard program itself. It's a long-term program, been in existence now for almost 50 years. The core of the program really focuses on long-term financing. So guarantees of loans for real estate purposes, buildings, equipment, expansion of businesses. You're looking for a typical loan would be a long-term loan, but also would include some working capital and operating costs. Probably the most significant difference between our standard program and the B&I CARES Act program when we speak of program modifications, probably the biggest difference is going to be the use of the loan proceeds. For the B&I CARES Act program, we're restricting the use of loan funds for working capital purposes only. So it's not to refinance. It's not for financing of real estate expansions or business expansions or other activities, but it is to support the working capital, the operating capital needs of businesses. We'll talk a little bit about how the standard B&I program is still available and can help with all purposes also, for rural businesses as we go forward. The guaranteed loan programs, and here our title on this slide is B&I program, but actually applies to both. So our standard B&I program and the types of borrowers that qualify for the standard program are the same that qualify for the B&I CARES Act program. So it could be a for-profit business, a nonprofit, cooperatives, subsidy tribes, tribal enterprises, public bodies that operate enterprises. So facilities like a hospital or healthcare, education facilities, either as a public facility, a nonprofit facility, those all qualify for the program. Under a for-profit, it could be any business structure. Corporations that are publicly traded are eligible, along with sole proprietorships and any structures in between are eligible for both programs, the B&I Guaranteed Loan Program and the B&I CARES Act Loan Program. As far as lenders, our next slide. The lenders in the program, again, lenders that are eligible for our standard program are also eligible for the B&I CARES Act program. So generally lenders that are depository type lenders that are chartered by a federal or state charter or under the supervision of a federal or state agency such as banks, savings loans, credit unions, all qualify for the B&I program and for the B&I CARES Act program. Other lenders that are supervision of a federal or state institution could also qualify, but those types of lenders need to go through an application process first. All right, some highlights about the B&I CARES Act program. The program itself was funded by the CARES Act. This is in early March with about $20 million, $20.5 million of budget authority for the program. Congress indicated they want us to support approximately $1 billion in lending authority. So we had to structure the program accordingly to build the program to support about $1 billion. And we'll talk a little bit about how that is done in a future slide here. But the program itself is going to be open depending on the availability of funds. It could run up through fiscal year 2021, through September of 2021, but there are limited funds, about $1 billion. So if funds are utilized before that, we would close the program down prior to the end of the fiscal year. We wrote some interim rules. So these are regulations that we added to the B&I program to run this program. Those were published on May 22. The rules, we refer to them as an interim final rule because it's open for public comment. So we're encouraging lenders to take a look at the rules. If you have some thoughts, comments, or concerns about the regulations, feel free to make some comments. At the end of this, we'll have a link back to the Federal Register, and that is the infrastructure to make comments. Again, we'll remind you of that at the end. The comment period is 30 days, and that expires on June 22nd. And then also in the Federal Register, we published a notice of funding opportunity, and basically that opens up the application process. So we opened applications a week ago, and our offices are ready to accept applications rolling forward. A couple of highlights about the differences between the B&I program and the B&I CARES Act program. Kind of these 7 bullets are really the major highlights. I'm just going to roll through these very briefly. And then David is going to drill into a little bit more detail on many of these as we walk forward. As I noted earlier, the first one, the major difference is the use of loan funds. So the B&I CARES Act program, funds can be used for working capital purposes. So think of it as generally these are business operating expenses plus principal and interest payments would generally qualify. Things like loan costs, costs to provide financing, would also be eligible within working capital purposes. We'll talk a little bit about the loan structure, the guarantee percentage. For this program, we set it at a fixed 90% for all loans. For those of you that work with our BNI program, you know that that rate could, in our standard program, could change based on the loan amount. We have a tiered structure. However, we are not incorporating that tier structure for the BNI CARES Act. So a BNI CARES Act loan will be a 90% guarantee regardless of the loan amount or regardless of outstanding BNI loans to that borrower. We also set the guarantee fee at 2%, and that is a fixed rate for all loans under the BNI CARES Act. We expanded the eligible purposes to include agricultural production. So an ag producer is a rural business. Just our standard program would consider an ag producer as a rural business, but our standard program has restrictions on being able to use loan proceeds to support ag production. Our standard program can support processing and other activities by an ag producer, but not the actual ag production itself. But under the BNI CARES Act program, an independent producer could apply, receive a working capital loan to support agricultural production. Also, that's probably the second biggest difference in the BNI CARES Act program compared to the BNI program. We extended the terms. So under a standard program, our working capital is limited to a 7-year term. Under the BNI CARES Act, we're adding 3 years to that term, so a maximum of 10 years. And we'll talk a bit more about the details there. We also revised the equity requirements for a business to qualify for a BNI CARES Act program. We made it a little bit easier, plus provided some opportunities for some alternative methods to qualify for equity. So we'll walk through those details. We provide a bit more flexibility in collateral analysis. Under our standard program, we ask lenders to discount collateral, and that require that a loan be secured by comparing the loan amount to the discounted values. For the BNI CARES Act, we can lend up to 100% of market value. So the loan to value could be 1-to-1 on the BNI CARES Act loan. In the maximum loan amount, we're going to talk about maximums a couple different ways, but the ultimate maximum level is $25 million. There may be other restrictions when we walk through some of the details, but the $25 million applies to the BNI CARES Act loan. If we have borrowers already active in the BNI program, it would include any existing BNI loans plus the BNI CARES Act. But under our standard program, we have to exceed a loan of $10 million. We have some exception authorities that needed to be met. Those requirements do not apply to the BNI CARES Act program. So for BNI CARES Act, the $25 million is our threshold. We don't use the $10 million threshold for this program. Okay. A couple other, just kind of walking through some of the highlights again. The term, up to 10 years for working capital. That does include ability for deferral of interest for the first year, principal for up to 3 years. So if a lender borrower would structure a loan with a 3-year deferral, the repayment of the loan, remaining payment would be over a 7-year term, so not to exceed 10. And again, the loan purposes are for working capital, and we'll have a couple slides here kind of drilling into a little bit more detail to address what we mean there. All right, so the loan structure itself, again, we mentioned it's a 90% guarantee. That is to be for all loans, regardless of loan amounts. 2% guarantee fee that's paid at the time of issuing the guarantee. That's a one-time fee. And then we set the annual renewal fee at 50 basis points. That fee is paid on the unpaid principal balance as of the end of December of each calendar year. Okay. Dave's going to talk about the working capital loans and multiple draws. Keep in mind that the annual renewal fee is based on the unpaid principal balance at the end of the year. Okay, so with that, I'm going to turn over to David Chestnut. And Dave is going to go through a few more details, unless we have a couple of questions you want to start with. So I'll let either Thomas or Bob, you want to get into details, or do you have a question or two that you want to address first?
Well, what I want to remind the audience of, you do have that chat feature to type in questions. We did get a few questions ahead, but if the audience has questions, please type those and send those to us, and we'll work through those as we go through the program. But I'll let Dave go ahead and get started, and we'll hit the questions as they come along right at the very end.
Well, again, thank you very much, Mark. Thank you, Thomas and Bob. Thank you, roundtable for inviting us in to speak a little bit more, and hopefully we can get some good rural businesses recovered out there through this program. As Mark mentioned, any legal entity is an eligible borrower. This also includes sole proprietorship. So if you have those out there, and it also includes publicly traded corporations. So we're not limited. We do not have a size standard for the borrowers. Independent agricultural producers are eligible, and they're eligible if their loan request is not eligible for FSA financing. Our sister agency, the Farm Services Agency, is a very good lender, very active in the agricultural community. But if an ag producer is not eligible for FSA financing, they are eligible for the B&I CARES Act program. We estimate that a lot of that ineligibility will be primarily because the borrower exceeds the FSA's loan limit. Right now, that's $1.776 million is their loan limit with FSA. So in those cases where an ag producer needs $3 million for economic recovery through the B&I CARES Act program, we know that they're not eligible for FSA financing, so that would come directly to us. Borrowers can use a combination of both if they're eligible for FSA, but they don't have to. They can come to us for the B&I CARES Act. One of the primary condition is that the applicant must have been an operating business as of February 15th of 2020 in order to be an eligible B&I CARES Act program borrower. That is a threshold that was set by the CARES Act, and so if they were in operation on February 15th of 2020, they are eligible for CARES Act financing. This also, we don't worry about the age of a business. If they were in business for less than a year, we're still considering them an existing business, but they must have been in operation on February 15th. Next, as Mark mentioned, our loan purpose is working capital expenses only. This is used to cover a business's working capital costs. The purpose is to prepare, prevent, and respond to the coronavirus pandemic. We know that some businesses are open, restaurants on a carry-out basis. A lot of businesses are closed. You've got other things that are operating with higher expenses, but basically this CARES Act loan is working capital to get a business from where they are now to full production and whatever their new normal is going to be for operating a successful and sustainable business. This is all based on need, and when lenders talk to their borrowers, they're going to need to discuss, well, borrower, what is your need? How do you get from here to there and where you want to be? This is a supplemental fund to get them and cover working capital expenses. This is where you're going to need to have those deep conversations with your borrower about what exactly is your need, where are you spending your revenues and your dollars on working capital going forward. From there, we do mention that we can support agricultural production if their loan request exceeds the FSA guaranteed loan authority, or if it's not otherwise eligible. But again, the purpose here, we want to get businesses back to operating and we want to get the country back open again. Next one.
Dave, can I ask a couple of questions here?
Oh, sure, Thomas. Yeah.
About the need. Can closing costs and fees be included as part of?
Yes, closing costs and fees for the B&I CARES Act program loans can be included. That's a working capital expense. Someone asked a question in an earlier webinar. We're doing another loan under the regular program. Can those be funded under the CARES Act? And that answer is no, because that's not a working capital expense and being used to for pandemic purposes, essentially.
Okay.
But yeah, loan costs can be included, yes.
Thank you.
Eligible uses, wages, salaries, commissions, healthcare, property insurance, hazard insurance, principal and interest payments on existing loans during your pandemic recovery. We cannot allow any B&I CARES Act program funds to be used to make any payments to stockholders, owners, or related party debts. You can use CARES Act program funds for rent payments on leases, routine maintenance. Routine maintenance may include additional or specialized cleaning supplies to deal with the virus. And so this, may include additional PPE for your employees, ways to protect their health in the business. We want them to fully recover, have their employees safe in the environment in which they work. The working capital purposes will include B&I CARES Act funds to make loan and lease payments while they financially recover. So this includes their B&I loans, any SBA loans, FSA loan payments, but again, not any owner or affiliated debt. Essentially, the B&I CARES Act program loan funds should keep a business current in their obligations while they transition from a current status to a fully functioning and profitable business. Next slide. This is more eligible uses. Note that production agriculture expenses for seed, feed, and fertilizer are included in this. And as I mentioned, additional expenses related to the coronavirus, PPE, masks and gloves, plastic shields are eligible. And there's your question, Thomas. Yes, loan costs, essential loan related expenses are included in an eligible purpose. Next slide.
So they also could pay repayment of existing expensive or just existing SBA debt with the proceeds as well.
Yes, looking forward as to what they need to do to recover. So their payments to an existing SBA loan over the recovery period, that is an eligible purpose. So that's what a lender will be discussing with the borrower as to what is their need, diving into probably deeper than you normally would as to, where's your money going? We have that conversation with our kids all the time, but for this business, where's your money going? What are your loan payments and how can we help you assist that? Ineligible loan purposes, we do have in our regular B&I program, ineligible purposes and entity types. In this, golf courses are not eligible, lines of credit are not eligible. We cannot do any illegal substances such as marijuana, dispensaries or anything of that nature. We can't do gambling casinos. So all of those purposes and entity types that are in our regular program are also not eligible under the B&I CARES Act. But as Mark had mentioned before, this is a working capital loan. So any business acquisition, any purchase of land, buildings, equipment, funds for construction and other capital expenses, those are not eligible under the B&I CARES Act. So you can't buy equipment. You can't retrofit a business unless it is specifically for coronavirus-related expenses. Debt refinancing is only eligible if the debt was incurred subsequent to February 15th and also was used for eligible purposes. So essentially, we could possibly extinguish an SBA PPP loan if that's what the borrower wanted to do, assuming it was made after February 15th. Somebody asked about lines of credit. So if someone has dispersed funds off of a line of credit for working capital purposes, that may be an eligible purpose under the B&I CARES Act program to repay the balance on that line of credit. However, if a line of credit is maturing during the term when they're recovering, we cannot pay any principal balance that was incurred prior to February 15th of 2020.
So the key there, Dave, is it's got to be after February 15th, 2020 on any lines of credit or similar short-term debt.
That is correct. It must have been done not only after February 15th, so a disbursement made March 30th, for example, to pay their April rent and insurance, et cetera. I mean, that would be eligible to be paid back. But it also has to be for an eligible purpose. So if they borrowed money in March to buy pieces of equipment or buy a piece of land, that is not eligible under the B&I CARES Act program.
On that line of credit, if it was prior to February 15th, then it's not eligible as well.
Then it's not eligible. That's correct. This is where we get into maximum loan amounts. The loan limit, as Mark mentioned, cannot exceed $25 million. That's the total of any existing B&I guaranteed loans plus the new loan request. The B&I CARES Act program loan amounts is for the forecasted amount of funds needed to recover from the economic impacts of COVID-19. We're not stating a time period on how long that recovery period is, and this is where your discussions with the borrower come in very critical. Recovery may take a year, may take shorter period of time, it may take a longer period of time. But what we're interested in as far as loans to a borrower and based on a cash flow analysis is what amount of dollars are needed to cover a business's working capital needs until the business recovers through revenues and the business is sustainable and profitable to where they are able to meet their cash flow working capital expenses on their own. Lenders will likely need to assist a business in this calculation. Look at what revenues are they expected to receive and what are the working capital expenses while you recover. When we talk about the B&I CARES Act loan, you may have an interest deferral for a year, but at the end of the year, that payment's going to come due. So you can estimate what that interest expense is and include that in an eligible cost for a B&I CARES Act program. So what we're saying is base it on the cash flow analysis, talk to your borrower, see what you need to cure the problem so the business is reestablished on a successful basis. Next one. There are two calculations.
Let me ask you one question.
Yeah, sure.
Can we include cost of goods sold in that calculation as well?
Well, inventory is part of that, yes.
Okay.
So,
all right.
yeah.
All right. Thank you.
In this slide, we're talking about there are two calculations that are important. On this one, the maximum loan amount that we are able to lend is 12 times their average monthly working capital expenses. We will deduct the amount of any SBA, PPP loans or other federal assistance that's been received to also cover working capital or COVID-19 expenses. Essentially, we want no double dipping on federal funding. But this is the maximum amount of the B&I CARES Act program. This is not necessarily the amount that a borrower may need to recover from the pandemic. The second part of this slide is most important on the previous page, which is what amount do they need to economically recover and get back to normal business operations. B&I CARES Act funds are supplemental loan to cover expenses that meet their revenues, plus the SBA PPP insurance or any other resources that their revenues or income are not currently able to meet. If a borrower were to borrow less than the maximum eligible amount, then things change because we all know that borrowers' forecasts and projections aren't always met to the dollar. But say, for example, their projections do miss the target, they are able to come back and request a second CARES Act loan so long as the total of the loans do not exceed the maximum eligible amount per the average working capital calculation. So as I mentioned, there are two calculations, one being the maximum they're eligible for. This should be based on historic working capital numbers. If you've got 2019 full year information, that's probably a good judge of what their working capital needs are. If they borrow less than that and they need additional funds, they can come back for a second loan. Next slide. Yeah.
Is the new Main Street loan program considered a federal emergency assistance? Would you consider that in there as well?
Is that through the SBA? Is that a federal program?
Federal program through the Treasury.
Yes, it is.
Okay. All right.
We also had a question, what happens if the borrower estimates and they've applied for it, they haven't gotten it, we set a maximum amount. If they get SBA PPP funding later or Main Street funding later, that should be disclosed and it would reduce the maximum amount that they're eligible for in that. So even post loan funds, post federal disaster funds received.
Okay, well, that's good. I think that answers another question here about someone asking about if they have a PPP loan, how that impacts them, but we just need to reduce that from the overall.
Yeah, it just reduces the maximum amount that they're eligible for. But realistically, if you're making an estimate of what they need to get from here to there, that, you add the two together and that should be that amount. So the BNI CARES Act program loan and the SBA PPP loan combined should be able to meet that. This is a calculation example. You can use an average of working capital expenses. Hopefully an existing business, you can average out the last 3 years. Then, as I mentioned, subtract out any PPP loans or other disaster assistance to get the maximum amount. If the borrower has not been in existence for 3 years, or the information available isn't quite there, this is where we ask lenders to get the most reliable information to determine what the average working capital expenses are. We are saying that, everyone prefers GAAP prepared financial statements, but we know that our ag producers, independent ag producers, would use financial statements common to that industry. FSA has a wonderful financial statement specifically for ag producers that they use, and that is acceptable to us in this program. But use any financial information available to determine what their eligible CARES Act loan is. Next slide. These are some terms that are specific to the BNI CARES Act program loans. All loans must be a draw note with funds dispersed in accordance with their working capital needs or their recovery needs. We will not allow a full disbursement of funds at loan closing where the lender puts some money into an escrow account. We want this to be a draw note based on need. The business should have a demonstrated need for the amount of funds drawn at loan closing, with the remainder then available as needed as they progress through the increase in revenues to get up into a normal operating level. We're saying that the lender should have the capacity to hold guaranteed loans in their portfolio for this reason, because we're allowing a draw term. The borrower is drawing it as they need it. When loans are dispersed to the borrower, we don't need to be notified that a draw on that loan has been made. That's between the lender and the borrower. So they will make those hopefully on a monthly basis back to the lender. As Mark mentioned, all loans have a 10-year maximum maturity loan. And like all BNI loans, balloon payments are not allowed. For those lenders who are not familiar with the BNI program, you can have a variable interest rate on these loans. The interest rate cannot vary more frequently than quarterly throughout the term. The interest rate is negotiated between the lender and the borrower, as well as the interest change frequency. All of the variable rate loans have to have a published base rate, so you can charge you may charge a treasury rate plus 4%, for example, adjusted quarterly or semi-annually. It's negotiated between the lender and the borrower. We do allow a deferral of principal and interest for 1 year, a deferral of principal for up to 3 years, but the loan must fully amortize by its maturity date. So in essence, if a borrower were to take full advantage of all of the deferrals, they would have the same principal balance. If they did $1 million loan, they'd have $1 million balance at the end of 3 years, and they would then amortize that over the remaining 7 years of the loan term. At the time of application, the borrower should let the lender know, the lender should let the agency know what any loan deferral payments are, what the loan repayments are, the terms of any interest or principal deferments that the borrower elects. As I mentioned, the rates negotiated between the lender and the borrower, and again, cannot adjust more frequently than quarterly. Next slide. Collateral, we'll talk about that. All loans must be adequately secured. We are not discounting any collateral for the BNI CARES Act program loans that are made for working capital. Junior lien positions can be accepted, but there must be adequate equity in the asset value to secure our loan. When we look at collateral value for inventory and receivables, if you're taking those will be valued at the current balance sheet amount at loan closing or at the time of application. Next one, continuing on collateral requirements, we're going to talk about appraisal requirements. We want people, lenders, appraisers, staff, our staff to be COVID sensitive on appraisals and site visits. Note that appraisals are only required if the loan amount is over $1 million. This is different than a regular B&I program where we require an appraisal on any asset that's valued over $250,000. Note that we will accept appraisals on an asset that is up to 2 years old. Typically in the B&I program, we call a current appraisal within 1 year, but we're going out to an appraisal completed within 2 years. Lenders may provide an updated appraisal in lieu of a new complete appraisal if the original appraisal amount's more than 2 years old. We are relying on the lender to tell us that the collateral value is there. That is standard in our program as well, but this is documentation effort that we have. We do want appraisals to be USPAP compliant, but for health reasons, interior inspections are not necessarily required as part of a new appraisal. Chattel appraisals can be based on an industry expert. From that aspect, we're not requiring a real estate or certified real estate appraiser. We want someone familiar with the equipment to be the appraiser on that. Next slide, I want to get into equity because that is different, and we're improving that. B&I CARES Act program, we do have a 10% balance sheet equity requirement. All borrowers must demonstrate a 10% investment in their business or the project. When we talk about balance sheet equity, we're not talking tangible balance sheet equity. We are talking balance sheet equity. This is our 10% balance sheet equity requirement. It's a standard for any existing business. As I mentioned, we're treating all B&I CARES Act program borrowers as existing businesses. So there's a 10% equity requirement. And again, not a tangible balance sheet equity requirement, so you don't need to take out any balance sheet items for goodwill or intangible assets out of that calculation. There are 3 methods to meet our equity requirement. One of them that we've included in here is balance sheet equity that includes owner contributed capital of 10% or more of total fixed assets. And I'll explain that a little bit in the next slide. Or the borrower can invest other funds into the project equal to 10% or more of the total eligible project costs. So total eligible project costs would be the amount of working capital needs that the business has to get them from where they are now up into full recovery. So the next slide talks about balance sheet equity. Simple calculation, take the total assets minus the total liabilities to determine equity. Then take that equity divided by the amount of total assets to determine an equity percentage. Again, there's no deduction for intangible assets to arrive at what we typically in the B&I program would call a tangible balance sheet equity. In this case, the borrower has $790,000 of equity, 39.5% equity in the business, so that certainly meets our 10% minimum balance sheet equity. I mentioned that the business may also meet the equity requirement by having owner contributed capital equal to 10% more of their total balance sheet fixed assets. To determine a fixed asset total, we take their fixed assets stated on the balance sheet, add back any depreciation, and that becomes a total fixed assets. And then divide any owner contributed capital by total fixed assets. So looking at this example, you've got non-current assets at $1,850,000. Let's say the non-current assets in that business were $1,850,000 and they've got $350,000 of depreciation in there. Then basically they've got $2.2 million as total fixed assets. If the owner's contributed capital to this business is about $300,000, that's more than 10% of the total fixed assets. So take that total fixed asset total, and if the owner contributed capital is greater than 10% of that total, you've met our equity requirement. So Thomas, you got a question on that, or is it?
I don't think I've got one on specifically on equity, we've got a lot of questions. Let me just ask you this one. Are sole proprietors eligible?
Oh, yes. Yeah. Sole proprietors in business are eligible. Yes.
Okay.
We can go to the next equity slide. We're talking about an income contribution. There are a couple slides on this. As I mentioned, they can meet our balance sheet or equity requirement by cost contribution at loan closing. So if they estimate that they need $1.5 million to get from where they are now to meet all their working capital needs until they're fully recovered, they plan on contributing 10% equity in the project in the form of cash. So this can be additional cash from an owner or other resource. But if they need $1.5 million and they only want to borrow $1.35 million under the B&I CARES Act program, they're putting in a $150,000 cash contribution. That's meeting the equity requirement of 10%. The next slide is also an equity calculation of other funds. Let's say they need $1.2 million. They've already received a $250,000 SBA PPP loan to meet their working capital expenses. They would be eligible for $950,000 B&I CARES Act loan, but they've received a 20% injection of other funds from the SBA PPP loan, so they have met the cost contribution calculation of at least 10% toward the project cost. So again, we've expanded availability of equity, how we calculate equity. The question is on balance sheets. We can use tax returns if financial statements are not available. We do prefer GAAP prepared financial statements or financial statements prepared in accordance with GAAP, but use the most reliable documented financial statements available. And Thomas?
Yeah, I was going to say, I think that answers a lot of questions. We've had several about, if they've had existing PPP loans, are they eligible? You've mentioned that they are. You can use the PPP loan proceeds as your equity requirement there as well.
Right.
Big help, I think, to a lot of small business owners, obviously. What about the question, how will guarantees work for nonprofits?
If the nonprofit defaults on their loan, we'll pay the lender 90% of the loss. Nonprofits are an eligible borrower in this, so they're no different than that. Now, they because they're nonprofits, they may have some audit requirements under the nonprofit to retain their nonprofit status, but that would be about the only change. They're no different than any other borrower.
Okay. What about, here's a question, can excess appraised value that was previously discounted for an existing B&I loan be used for the security for this working capital loan?
So the appraised value, we're using the appraised value of the asset.
Yeah, so what they're asking, the excess, where it was previously discounted, that excess, since we're at a 1-to-1, that would work.
Well, I think in the regular B&I calculation, and Aaron can correct me on this, is excess appraised value cannot be used for the equity calculation.
That's
I'm just talking about the collateral piece.
Yeah, so if they're talking the collateral piece and there's an appraisal that says the real estate's worth $3 million, the real estate's worth $3 million, we don't care what it costs.
right.
Yeah.
Okay. All right.
Hey, I have two quick questions if I can. David, I may have missed it. Is there a max of number of employees that we can lend to, or sales, or I may have missed that?
No, Bob. Yeah, we do not have any size standards as it relates to revenues or number of employees.
Thank you. And Thomas, my question to you is, but to both of you guys, and good to see you, Aaron. Secondary market, can these loans be sold to the secondary market? And Thomas, what type of appetite will there be?
Aaron can answer that very well, but yes, the answer is they can be sold on secondary market. There is, however, a restriction that the loan must be fully funded before they can be sold in the secondary market, and also must be in a current status. While they're during the deferral period, whether it's interest only or principal and interest, as long as they're in deferral, they're current, in a current status, even though they may not be making payments. But again, we ask that lenders have the ability to hold these loans because we're not allowing a full disbursement at loan closing. We want them to disperse, so they may not be fully dispersed for 6 months, as an example, but when they are fully funded, they are totally saleable on secondary market.
Thank you very much.
You're
Yeah,
welcome.
so these are draw notes, so everything needs to be fully advanced before they can be sold.
And I'm going to introduce Aaron Morris. Aaron Morris is our division head of the program processing division, and he's responsible for all guaranteed loan programs in Rural Business Cooperative Service, and I'll let him take it from here.
Thank you, David. Bob, it was good to see you. Thomas, thank you so much, everyone, for hosting. Sorry I was a couple of minutes late. I was getting off another webinar. I might be able to start giving classes on how to do webinars before this whole thing is over with. So thank you for having us today. Now that David's kind of given you all the guardrails and the lines that you have to color in inside of as far as the policies for the program, now it's actually time to apply for the program. Just keep in mind, those of you who have been working with our program and you've got existing BNI loan borrowers, we're not going to need historical financial statements from them. We're not going to ask them to resubmit those as part of their application package. We should already have that stuff through routine servicing actions. So we're not going to ask you to resubmit those. I know that's not here on the slide, but just wanted to make sure that you were aware of that. Loans for working capital are going to be classified as categorical exclusions for the purpose of our environmental requirements. That's our lowest standard of environmental requirements and requires the least amount of paperwork. So all BNI CARES Act loans are working capital. Of course, if we find something where we might need to request some additional information, we will, but we're going to consider these CADXs. Draft loan agreement is not going to be required at the time of the loan application. That is a requirement in the regular BNI program. That's not going to be a requirement here. The goal is to be able to process these applications as quickly as we can and get money into our borrowers ASAP. So we're not going to require a draft loan agreement, nor are we going to require a business plan or a feasibility study. All of these businesses were in existence prior to February 15th, so we're not going to need a business plan here. If they don't have financial statements that are prepared in accordance with generally accepted accounting practices, we will accept tax returns for BNI CARES Act loans. So if they're not available, we'll take tax returns. Ag producers, those financial records should meet the industry standards. We're relying on you lenders to know what those industry standards are and make sure that those financial records that we get from ag producers, should you be working with them, meet those standard accounting practices. And lastly on this slide, we do have a simplified application for our smaller loans. We define smaller loans as those that are $600,000 or less. We encourage you to use that simplified application process, again, so we can speed up the process and get these applications submitted, processed, and ultimately closed as quickly as we can.
Aaron, let me ask you a question there. There is not a preferred lender program at the moment.
No, there is not.
Thank you.
Yeah. As many of you know, but in case some of you don't, applications will be received and processed in the state office. Right now, most of our state offices have approval authority of at least $5 million through July 31st, those of them who may have a new program director, but they all have approval authority through July 31st. We are looking into extending that if necessary, but right now all of our states should have approval authority and you can work through them. What was that, Thomas?
I had a question, sorry to interrupt you, but related to that, coming to the national office. So most states should be able to handle the BNI CARES Act loan without having to come up to the national office.
Unless they are really, really large working capital loans, they should be able to handle these loans in the state office. There will be instances where, the aggregate, if it's an existing borrower, it could possibly come up, but we've had some discussions about that earlier today. If the actual loan is within the state's office approval authority, we want to keep that loan down there.
Okay.
Yeah.
Good.
As you heard from Mark and Dave, there's $951 million available. All those funds will be maintained in the National Office Reserve account. We're not going to be able to allocate these funds out to the states. However, I'm committing to making sure that as you request funds, we get them out. Sometimes it'll be the same day if it happens early enough. But we want to get these funds out to you as quickly as we can. So we'll be running reports daily trying to see when applicants and lenders are ready to close, and we'll get or obligate, and we get those funds out to you as quickly as we can. This will be first come, first served. So we'll consider applications in the order that they are received. Towards the end of the funding period, if we need to assign some priority points, we will, but we'll make sure you have ample advance notice prior to doing that. We can go to the next slide. The aggregate total for ag production, which is a new eligible loan purpose for BNI Cares, we're limited that to 50% of the total amount that's available. So $475.5 million has been set aside for ag production, or at least that's the max that we can make available for ag production. Should there be changes in demand or increased demand for it, we can publish a future federal notice revising that limitation if necessary. Combined applications for BNI, the regular BNI program, and BNI CARES Act. A lender and a borrower, you can combine applications. So if you're going to do a BNI CARES Act loan for working capital and then a BNI loan for, perhaps it's the purchase of real estate or for some other eligible purpose under the BNI program, that's allowable. You just need to make sure that the provisions of both programs are met. And so the provisions of the BNI CARES Act loan need to be met, as well as the provisions under the regular BNI program. But there is no issue with combining applications. I think that might be the end of my presentation. I'm going to hand it back over to Mark, who will wrap up for us. So thank you all.
Okay. Thank you, Aaron. And Thomas or Bob, do you have any questions you want to address first before we head into a little wrap-up? Or?
Yes, yeah, we've got several questions, Mark. We'll start with back on the question. I think I misread the question earlier regarding guarantees for nonprofits, personal guarantees. I assume those are waived for nonprofits, similar to the CF program.
Correct. So the standard personal guarantee requirements for the BNI program will apply to the CARES Act. But if there's not a owner of 20% or more, personal owner, like in a nonprofit, right, there's not a requirement for a personal guarantee. Same thing for cooperatives or other structures.
Okay. All right. And Aaron, you mentioned keeping these at the state level. I mean, what kind of aggregate are you thinking? Are you thinking 10 million and above coming to the national office, or is that just more on a case-by-case basis?
Yeah, if there's a BNI CARES Act loan that's 10 million above, it's definitely going to have to come. There are some that are above a state's approval authority. Say the state had a $5 million approval authority and they received a BNI CARES Act loan for that amount, or at least above that amount, that would need to come to the national office for review also. But if the actual loan amount for a BNI CARES Act loan is within the state's approval authority, it should stay down there.
Okay. And back on the SBA, PPP, the EIDL also will count towards equity, and it will also be deducted from the overall availability on the BNI CARES Act loan.
That's correct. That is correct.
All right. Oil and gas services, those are eligible. No restrictions there. Let's see. There's another question regarding the states. We've answered that one. Dave, this is a question you and I talked about before we got on, and I'll bring it back up to you. Can you provide more guidance on how the lender or the applicant is supposed to determine the need for each monthly working capital draw? So That's so.
You know, if they're making monthly draws, they should know what their bills, their expenses are going to be for the next month. They need to estimate the revenues. And basically, if there's a shortfall in there, that's the amount that they should draw from their BNI CARES Act loan. When you have your first meeting with the borrower, you and the lender and the borrower are going to sit together and say, how long is it going to take to recover? Again, as I mentioned, it may be a year, it may be a little bit longer, it may be shorter. But try to determine a total amount, and then as they go through the months, they'll have a better idea. Revenues may be more or less than they have projected, so their draws are going to vary. But it's more communication between the lender and the borrower. So it's their need that's going to vary. And as I mentioned before, if they underestimated the amount of the loan that they needed for the term to recover, and they still have room within the maximum loan amount, they can come back for another BNI CARES Act program loan.
Okay, that's definitely very important to note that they can come back for additional funding.
Yes.
What about the multi-note? We can do multi-notes. Is that possible?
It's allowed under the BNI CARES Act loan, under the regular BNI program, and that is not changed under any CARES Act provisions.
Okay. And as far as collateral, pretty well anything goes, accounts receivable, inventory, that's included in the...
No collateral that eats, unless you're an agricultural producer.
Okay.
No, that's a joke. Any collateral, any standard banking collateral that you would take, real estate, equipment, current assets.
Okay.
Yes.
And a couple of questions on equity. Owner contribution, is that all the shareholder equity or the balance sheet or less retained earnings? I think you went through that slide, but maybe you could just go back over the equity requirement.
Mark, you clarify that owner contributed capital.
Right.
I guess the question is retained earnings also owner contributed capital or not?
Yes. I mean, I think as long as you show 10% equity, you're good to go, regardless of how it shows up. Is that fair to say?
There are different equity, there are options of meeting the equity, and that's one, is that the balance sheet simply shows 10% equity, and that could be retained earnings. But if the balance sheet does not show 10% equity, but there's 10% of contributed capital, that's another way of meeting that equity requirement. Or there's the third of looking at their working capital needs. You know, more than 10% of the working capital needs over the period of drawing. If those are contributed by other means, that's also a third method of meeting that requirement. They simply have to meet one of the three, not all of the three.
Okay. Thank you. Let's see. No intergovernmental consultation required because we're not doing any environmental. Is that correct?
I think if a state does have intergovernmental requirement for any federal loan program, they would still have to abide by that. That was not waived under the BNI CARES Act provisions. And I think I'm correct in that, Mark?
Right.
We'll abide by that. So as far as prioritizing applications, new BNI loan versus the new BNI CARES Act to existing borrowers, I guess, how would that priority work as these new BNI CARES Act rolls in versus just a traditional BNI loan?
We're going to give them equal priority. We're working to put together a team. We expect an influx of applications through the BNI CARES Act program, but we're not going to, prioritize them over our regular BNI program. We're going to give both programs equal priority and do our best to deliver both efficiently at the same time.
Okay. All right. That's helpful. I think that's certainly a question I think everybody has. As far as the draw process, what standard of care is expected of the lender as it pertains to the specifics with the working capital draws? Should the lender be paying draws directly to eligible vendors or through the borrower? Is there any guidance there?
No real guidance. The lender's comfort level, if they want to, disperse it to the borrower's checking account, that is fine. As I mentioned before, we do not have to be notified when a draw is made. The lender should be documenting. If they came in August and said, I need $250,000 to get me through the month, they should document the lender requested, the borrower requested $250,000 because they got to meet these expenses. And just the whole thing on any of this and any loan actually is documentation. And just instead of just blindly seeing something show up in the account, there should be a request from the borrower saying what the loan purpose is and what the purposes are. And that also assists the lender in assuring that all of the loan disbursements were made for eligible purposes. So if a borrower came in August and said, I need to buy, 50 new tables for my restaurant business, or, I need to buy new furniture for the hotel, that's not eligible. So they should know what they're dispersing the money for. So document.
And that sort of leads to the next couple of questions. How exhaustive of a credit memo is expected for the loan applications, and just talking, again, another one, underwriting and application process. Those are several questions I've gotten. We know, most of us know what's expected on a traditional, but I guess tell us what's expected here.
Aaron, you want to kick off on that one?
Yeah, short answer is, as a lender, you should do your due diligence and do your homework. I don't think, we want to put too many guardrails on, how you outline a credit memo. But, giving us basic information about what the project is, how the money is going to be used, the ability for repayment. Those are things that we should expect to see. But I think we want to leave it to you all to properly demonstrate a borrower's repayment ability.
And I'll just chime in, the borrower's ability to repay the loan is a provision that all loans should be made on. This does not have any forgiveness provisions, as the SBA PPP loans do. This must be fully repaid. I would think that there needs to be some discussion on describing, even if it's a paragraph or two, of what the economic impacts were to the business and to why they're in the position that they are, whether they were fully shut down, how long they were shut down, if they were allowed to do just a minimal business, if it's a hospitality industry that had averaging 80% occupancy rate and all of a sudden they've only got 5 or 6 people, 10% occupancy rate. Those kinds of things should be disclosed so that when we as the agency are reading a lender's analysis, we should be able to make a determination that, yeah, this is how the business was impacted. This is what the impact is. This is where they currently are, and this is how long it's going to take them to recover and how they're going to be able to recover as far as any anticipated reopening dates. Lenders should be familiar with their state or community requirements as it relates to reopening their businesses, because it does go by regions and or states as to who may reopen and who may not. So just let us know what the situation is and how we're going to get out of it and how they're going to repay us.
Sure. But, I guess the ideal is to try to get these in and processed as quickly as possible to get the funds out to the small business owners and, documenting repayment, collateral, the normal things, but to try to get them out quickly.
Yeah, we don't need a 60-page lender's analysis. Those things get rather extensive and take a whole bunch of time where they dive into way, way, way deep in there. So give us the information we need.
Yeah, all credit memos tell the story of the borrower. Briefly tell the story, as Dave mentioned, how they got to where they are and their ability to repay. These are the things that we expect to see in a credit memo.
Sure. No, I think that helps. That's certainly a big question I've gotten a lot of, obviously, on most of these. We are used to doing very extensive, as you say, Dave, the 60-page memos. And I think that's what most people are asking and hoping, that we can do more of a slimmed down, briefer memo that explains and tells the story to get the capital out to the small business owners that desperately need it here. So that's very good to know. Good information. Let's see. I think we've covered most. Let me just look at the typed out. You're not going to require any IRS transcripts, 4506Ts that we get with SBA.
No.
And you refinance your own bank's working capital facility with an eligible borrower. I guess, can you after February 15th if it's eligible use of proceeds?
If they need a disbursement on that working capital line after February 15th for a working capital purpose, we can do that.
Okay. Talked about tax returns, financials. You'll use either of those. We've talked about the appraisals, the collateral. Hope I hadn't missed any questions here. If I have, I apologize to the audience if I missed some. I think one of the last questions, you don't anticipate getting any additional funding should you run out quickly?
Not at this time, but that's up to Congress, right?
We don't make those determinations.
It'd be up to our group to lobby. If funds run out quickly, we got to go to Capitol Hill and beg for more.
Exactly.
Leave that up to you, Thomas.
Yeah.
Bob.
Sort of used to doing that, and as you guys know, we're always big advocates up on Capitol Hill to make sure you got sufficient funding, always supportive. And, again, today we very much appreciate all of you taking time to join the National Rural Lenders Roundtable to go over the BNI CARES Act. I'm sure we'll have other questions. Again, if I missed a question, I apologize. Get that to us. I'll get it to Mark, Aaron, or Dave to answer, because I know there will be many more. And I think my phone's buzzing now, but text me as we go.
It's a loan applicant.
Mine too.
I too. But we do appreciate the guidance and your help. And as I said before, this will provide much needed access to capital rural America that's going to help tremendously. So Mark, do you want to wrap us up?
Just thank you for the opportunity, both Bob, Thomas. It's an excellent webinar. It's always great to touch base with you guys, and of course the network that you have connected to. So that's great. As you noted, if we have any follow-up questions, anything that comes up, let us know. And just a final pitch reminder that the rule is open for comment. So if there are some things that do either need some tweaking or you have some suggestions, let us know. We're glad to take a look at that and roll forward. Any projects come forward, we're glad to engage. Thank you.
That's a very good point, Mark, that it is open for comment. So I encourage the audience, if you have more specifics, as Mark said, submit those comments and let me know if you have additional questions. I'll forward those on up to DC as well. But thank you, everybody. I hope everybody has a great weekend. Bob?
Thank you. Good job, guys. Appreciate the information.
All right. Thanks, everyone.
All right, Bob. Thank you all.
Thank you, everybody. Thank you.